Hello and welcome to etbfsi.com. My name is Amol Dete and I'm in conversation with Munish Mittal from HDFC Bank. So welcome on the show.
Hi Amol.
So there is a lot of interesting digital journey we are aware about at HDFC Bank, whether the mobile application or the digital revolution, whether the ease of payments or so many things, we have been listening about HDFC Bank. So in fact there is this dawn to digital to dawn also theory that we have talked about. So since we have already reached from dawn to digital, my immediate question to you is, what is next now? What after digital at HDFC Bank?
Well, digital has always been the DNA of the bank. The bank opened on a premise to create a world-class Indian experience, banking experience using technology. And technology and digital are synonym, as you say, though the term has caught momentum and hype only in the last 5 years. So we continue our pursuit to create new products. Our essentially digital means smarter, convenience, choice to be offered to the customer, and reduce our cost, build scale. Those are some of the basics ingredients of using digital or the term digital. So we continue to further invest in digital technologies, whether they are public cloud, private cloud, mobile, social, or things like analytics. So some of our recent investments are going in creating a collaboration platform. I'm very happy to state that we have more than about 250,000 partners and merchants who use our direct pay platform, which is essentially an API based direct debit to the account. We have numerous of FinTechs working with us on the origination side for retail lending. We are leaders in auto loan and personal loan. So our public APIs or partner APIs, as you may call, on the digital platform are being used by multiple agents, multiple FinTechs like the likes of Bank Bazaar, Policy Bazaar, who originate leads and loans for us. We've invested further in digital technologies to go deeper into rural and semi-urban. 55% or more of the bank is in the rural and semi-urban. While on one hand we are increasing our branch footprint because touch and feel is very important from sales and service positioning of the bank in the branches, but we are tying up with partners like Common Service Center or Customer Service Center, I think as they call, part of the Niti Aayog Government of India initiative to offer banking more into the rural and semi-urban. Further, I think we've more invested in robotic processing automation, using analytics, customer communication optimization, using machine learning and artificial intelligence. We can talk more about it.
Absolutely.
So the initiatives are continuously going. It is never ending. Once you are on this journey, it is not to stop.
Right. Quite interesting. A very important question which I trying to get a sense on from a lot of CIOs and would like you to give me a better perspective on this is obviously Industry 4.0 and Web 5.0. These are the different terms we all understand about it. Obviously the technology has grown, the digital has grown, and most of the banks already have enough technologies with them. So when we speak about Industry 4.0, when the industry will be in a different era, Web 5.0 where the machines and the internet will talk with each other, what kind of usage do you see in a banking sector specifically, and what kind of technologies, whether it's IoT or collaborations or anything that you see will make a big difference in banking industry, keeping these terms in mind?
Amol, these are terms coined by various analysts or research companies or media companies and so on. I think it's a constant evolution process. The key term, if you ask me from our bank perspective, is that do we invest in technologies and use technologies to offer products and services to our customers to stay relevant? I think relevance is the key word. So as long as these technologies and these terms are relevant to our customers and our bank, and to be able to add value to investors, customers and other stakeholders, I think we will continue to invest in them. Take for example IoT. IoT is not a new technology, whether industry 3.0 or 4.0. or in Web 5.0. It's been there for some time. Not too many business cases or use cases have emerged in the area of banking.
True.
But I think technologies like IoT, we are using already in some way. For example, something very simple. Our employees, we've tried to make them smarter and smarter in the terms of being efficient, being more productive. Not that they are not smart already. Yes. These millennials are extremely smart. They have a very strong connection and idea of using technology to make their life easy and their customers' life easy. But something as simple as marking attendance. Yes. So we use IoT technologies to do a triangulation, and as soon as the employee offers in a particular periphery of the office, they're able to mark their attendance using a workforce, using a smart app which does equivalent of Internet of Things.
True.
Right? In our branches, we do something very simple called asset verification, physical asset verification of our UPS, laptops, printers, and so on. I think whether using a tag or an Internet of Things device, sensor plugged into our equipment, we'll be able to use IoT technology to do physical verification on a continuous basis.
Right.
Similarly, there's the concept of open office and smart office, where you can, using IoT technologies, determine whether employee is more in the field or more on the seat, is more on the conference room or on a designated desk. So we will be, not yet, but we have started digitizing our premises using a technology and a software solution called Smart and Spaces. We partnered with FinTechs.
Okay.
I know one of your questions has been, how is your collaboration with startups and FinTechs? So there is a FinTech and a startup called Smart and Spaces, using which we have digitized all our office premises.
Okay.
Most of our back office is large back office. We've done that. The next phase of that, in about 3 to 6 months' time, will be to map how is the seat usage. Hot seat concept. And we will have no permanently allocated seat to some of our workforce.
Okay.
And it will be a working open desk culture. So depending on your usage, you will be able to book one workstation for you and walk in and use that.
Okay.
So that's where I think Internet of Things will come into play. Your other point about Industry 4.0 or in a collaboration world, I think that's a given now. You cannot exist in the workspace or in the industry without collaborating.
Right.
One particular aspect of collaboration which I would like to talk about is in the area of essentially Industry 4.0, as you call. We are working with automobile manufacturers and automobile companies.
Okay.
Almost all of them.
Right.
To sit inside their portal.
Okay.
Not our portal, not just their supply chain or supplier dealer portals, but their customer portals.
Right.
And collaborate with them using their information about expectations of their customer, wanting a car, of the dream car of the customer, making inquiries about the car, flushing and fusing the data which they have about customers' behavior out of their research and their interactions with the customer, and the data we have of our customers, making them come together and offering a product inside real time in the portal of the automobile company to the customer, our 10-second auto loan product, for example. So collaboration actually is the only way to create a win-win situation with whom you are collaborating.
True.
co-optation, competition, and collaboration is the only way.
Quite interesting. In fact, you gave me 2-3 very important points. Obviously, collaboration is the important one. I will take one more question on that. But before that, explain me more on the millennial side, because that is the growth story of India now. Whole India is batting on the millennials, not only the organizations, but also, because it's a different world altogether for the millennials. So tell me something about for the customer side. You are already doing fantastic things for the workforce, those who are millennials. What are you doing specifically for the millennial customers?
Essentially, what do millennials want? They want instant gratification. Right? They believe more in the so-called cashback world. Right? They probably are less interested in loyalty and reward points. They're more interested in cashback.
Yes.
That's what I think some of the other digital platform companies are doing. And some of the payment banks, that they offer quick cashback to the customer. So our millennial card, HDFC Bank Millennium credit card, is focused on cashbacks. Conversational bankings. The millennials want to engage with the bank in a manner which is very common, which is common sense, which comes to them naturally. They are all the time living inside a Facebook Messenger or WhatsApp. So our WhatsApp banking, our Facebook Messenger banking, and our conversational banking is specifically focused on the millennials. What more? They are interested in perhaps using a lot of credit on the consumer durable side, on the convenience banking side. We have introduced zero interest, easy EMI options at the time of checkout with e-commerce partners. So you can use HDFC Bank EMI not only on our Smart Buy platform on the card of the bank, but also on third-party large e-commerce players at the checkout. You can choose to use and say pay now or pay later. In pay later, you can use not only card but also EMI on the card, which is interest free, specifically for the millennials on the small ticket. So I think our intention is to offer the same experience to all customer segments, whether they are urban segment, metro, rural, semi-urban. In fact, the power of digital technology is that we should be able to offer the same product, same price point, same convenience, same choice of device, same access mechanism, at the same affordability across the customer segments and the geographical segments.
Okay. So you spoke about collaboration, and that is a very important term, whether you call it partnership or collaboration for all the financial institutions. Since you are partnering with a lot of FinTechs, government agencies, and e-commerce players also, what kind of partnerships and collaborations do you have with these companies to reach to a next level?
All kind of partnerships. For example, we have through a fund management company, because they know their job best, we have a startup and a fintech investment fund with a defined approved corpus, and we invest small amounts, very small amounts in the fintechs and startups as one of the ways to partner with them. Essentially, that is to offer them not just the bank's brand and a very small token investment, which is insignificant in a percentage terms, but to give them confidence that, listen, we are there to consume your technology. We are happy to be an anchor customer for you. We are happy to offer you a mentoring and coaching program through this investment, which is otherwise a token investment, something as small as 5 lakh, 10 lakh, 15 lakh, 20 lakh, no big, not even 0.1%, 0.25, 0.5, not even 1%. So our interest in them is to make sure that they're as independent, as neutral to anybody. They can go to any customers, but they can leverage our experience and our mentoring and coaching and hand holding, besides being potentially an anchor customer if they want us to. That's one way of investing. Second way of investing is to be to be formally the primary consumer of the software or of the platform or of the technology. FinTech essentially means finance and technology. Or whether they are offering finance or they're offering financial technology or both. So we have some investments in which we are majority stakeholders and a primary anchor customers. For example, some of our platforms for consumer durable loan origination, some of our two-wheeler loan origination is our partnership with FinTechs who offer us technology platforms. They offer to all other companies, automobile companies, NBFCs as well. But that gives them strength that they have a continuous revenue stream, and we have the ability to leverage a platform. So we invest in the platform of FinTech and adopt a product management approach. Which means constantly improving what you call DevOps or CI/CD, that multiple waves of small innovations and keep creating the product rather than taking a project approach of taking a monolith product from the market and then just doing a waterfall mechanism of doing a large project and then miss the innovation and the time to market in the process. So multiple ways we are partnering with FinTechs. We have API banking. We have, as we speak, at least 50 plus FinTechs, actual FinTechs, NBFCs, loan origination FinTechs who are offering loans to the customers, who originate for us, create lead, so they act as channel for us, they act as a market opener for us. If customer for any reason like to work with, take Bank Bazaar as an illustration, or Apna Loan as an illustration of FinTech, we are partnering with them. They're creating leads for us. And API banking is a very easy, big way. Depending on the level of partnership, we can allow them to offer fulfillment. And if we have a credit partnership with them, then we also offer them a capital under certain terms, which they can deploy in the market.
So I come to you, in fact, last two questions, but the question about DevOps, you already gave me a hint, and in fact, you spoke a lot about it even in my previous interview with you a few months back. What has been the progress that we have made specifically to DevOps in last 1 year, and how do you want to utilize that aspect specifically?
That is a very, very important aspect. I think the technology is synonym with business today. So, and DevOps offer three things. One, it offers a complete agility. When I say agility, means time to market. Digital means being able to create new products which did not exist earlier. Digital also means being able to create new versions and derivations of existing products. Banking is not complicated. In fact, banking is essentially a liabilities business, as our managing director also quotes and says, keep it simple. Savings account, current account is the core foundation of banking. And we can create more and more derived digital products. For example, Smart Buy is essentially a product, an engagement platform for our customers to use a debit card, which has nothing but a savings account at the bottom. So what is a digital banking? It's essentially opening up of the savings account or a CASA underneath. So creating these variations of digital products and new digital products require a lot of small innovations and enhancements to be carried out to our APIs, microservices and applications, which requires data center agility to be able to create new instances for our testing, for load testing, for performance testing, for functional testing, and you can't invest tons of capital in that. Leveraging cloud technologies and DevOps, you are able to automate this. That's first thing which the DevOps and terms like continuous integration, continuous development, continuous delivery offers. Second thing it offers is automation in terms of release automation. When you are creating products and variations at a monthly release, a weekly release, a fortnightly release, a quarterly release, of new versions and therefore new functionality, it's possible that something will go wrong.
True.
Right? End of the day, it's technology, it's software.
Yes.
So release automation offers you, and use of private cloud technologies like Kubernetes and Docker offer you to be able to roll back to the previous good instance, or just shut down the rogue, containers.
Right.
So that's the second aspect of release automation. Third, I think it offers a reasonable opportunity to adopt modern innovation which is happening in the cloud world, in the open source world.
True.
So we, as an enterprise, we need a lot of support, we need a lot of subscription, but at the same time, we don't have to pay a huge license fee using the open source technology. So we're able to reduce our fixed cost, our capital cost of investing in software. We just have to pay for very minimum support for subscription to a chosen system integration partner, and using open source technologies which is more prevalent in DevOps world helps us reduce our cost.
So I have a very important question here, sir, and I'm trying to learn from a lot of people. Just one thing here, that you have adopted many technologies at your bank. Are there any chances, because even Google have also failed with many other products? Obviously they have supreme products already working in the market, but behind that there is always a failure. Have you faced any failure with any product that you launched?
Of course. There are always difficulties in software and in technology work. Even human beings don't come with any guarantee. Software doesn't come with any guarantee. There is always a human being at the back of the software. There are actually, you talk about robotic processing automation.
Yes.
There are actually robotic tools which generate the software code, right? Even though we have deep vulnerability assessment and penetration technologies for cyber security assessment of our software, even though we have constant evaluation and we conform to standards like OWASP, for mobile technology softwares, there are always failures in the software world. We had difficulty when we launched the first version of our new mobile app. Right? We had too much of demand to cater to on day one, because we had some interesting, very attractive feature called set a quick access pin. And it was untapped. Right? It was on tap and without any boundaries. So millions of customers who downloaded our app on day one wanted to set up a quick access pin, and we couldn't cater to. So there are failures like this. I think I heard this term very recently, that early success is rewarded for lack of preparation. Right? So if there is no failure, there is no opportunity for improvement.
Absolutely.
Right? So I gave you one or two specific references. We are experimenting with multiple technologies. Not all of them produce the expected or envisaged value from day one, and there are always failures. Our ability to then quickly tweak, improve, re-engineer, and in fact the digital technologies aid in this in a big way. Docker containers essentially offer this opportunity to be able to just shut down the failed product or the failed machine and roll back to the previously working customer service offering.
Thank you sir for those great thoughts. Great talking to you always. Thank you so much for talking to etbfsi.com.
Thank you.
Thank you so much.
Pleasure talking to you.
And thank you so much for watching etbfsi.com. Stay tuned, stay connected to etbfsi.com for the special coverage on banking industry from around the globe. Thank you so much.